Welcome to this week's Cattle Call. I'm Susan Littlefield on the Rural Radio Network. You know the old saying, what goes up must come down, hopefully not for very long, but it is going to be kind of a slower week this week, and we can't complain because we've definitely had some good couple of weeks on this trade. So what's going on with the Packers? Are they trying for some leverage? Are we going to see some slower cash? Are they going to wait till Friday or not even offer any bids at all? We're going to get all the details on this week's show as Brad Kooima joins us. He's with Kooima Kooima Varilek out of Sioux Center, Iowa. So let's talk about the fact that we've had a couple really good weeks, and it's okay once in a while to have to take a little bit of a step back.
For sure, and I think part of the explanation for today's action is high prices. You get more volatility. Market obviously comes down easier from high levels. There's I got Post-it note stuck right up here on my desk, up on the stairs, down in the elevator. I mean, it's just reality. Now, do I root for this thing? Of course not. Do I think that the producer should make money? Yes. And so don't misunderstand me. But there's a fine line where we have the extreme leverage, which we had for a few weeks there. It felt like you really had the packer kind of over the barrel where he needed supply. He kind of misjudged his inventory, wasn't getting as many turn-in cattle, it seemed, and all of a sudden participate much more actively in the cash market than he had been before. And you see who wins on those kinds of, that kind of parameter. Now, it seems like this week we come into a deal where you've got a couple of things going on. I think it feels like maybe the packer has a little more inventory this week, Susan, than he's had the last several. It also, the market you get a little weak need, I think, if you're a feedlot operator and you hear futures are down $2, holy balls, right? I mean, and if you're a basis trader, which some of these guys, of course, are, or at least claim to be, and so they, maybe a little easier seller with futures breaking, I did like up here, I'd say there was a fair amount of resolve. Around here, I hear people still holding for basically steady prices, which is 190-ish. Getting bid close to that. There was a little light trade at 190 here just north of me this morning. But then there's some trade in western Nebraska on some, I think, maybe not the highest quality of cattle, but at 186, which is a couple, three lower. So that news seems to, get in the marketplace real quick. And of course, that's what the packer wants you to hear too. So a little edge off the cash market is one of the things I thought that was going on for sure today.
So is it going to be probably late Friday afternoon before we really see any sort of, if any, excitement in this cash market?
I almost wonder if my area here, which is really, really void of a big supply of cattle, we might have a steady to a lack of trade week. I think if the packer doesn't come our way a little bit here back towards steady, you might just see the people go like, these cattle aren't fat anyway. I sold July's cattle already. I don't have much inventory. These cattle don't need some days anyway. And they may just kind of hold off. We'll see. That might be one of the tests on how big this break is. If we are become, the gates open and we just, start to go easy, that might make this break a little quicker and a little deeper than it would be otherwise. Otherwise, hey, you got a big discount. August cattle are below 171. You've got to have a pretty big collapse in the cash just to get there. So you're going to get days like this with the high market, but certainly I don't have to talk. You don't have to talk me off the window ledge, that's for sure. But we could sure get a little setback here for sure.
And we're definitely seeing that little bit of a setback happening in the South with some lower bids.
Right, and they're really trying to get after those guys down there. I hope that they bow their neck a little bit. Last week 186 is where they finished, and I'm hearing bids of 178 to 180. No trade. But, if somebody starts to break down and take a couple dollars less there, that further, all of a sudden the trend starts to be perceived to be a little lower. And then that's why the discounted futures, come into play, I suppose. So we'll see how it plays out. The beef doctors, if you want to call it that, the people I talked to there, with just beef comments, they're all bearish to a man. And of course, this is the time of year where that's very normal to break once you get to Father's Day. So I wouldn't be too alarmed about that either. My goodness, we got a $339 box value. We can go down $30 and still be above 300. So, it's the market. Each side's going to talk their story. I think at the end of the day, though, the story for me still is that we're pulled forward maybe as much as 30 days. These cattle are not weighing anything, and when you have that kind of current situation, that's 2014 like. Okay, now. Let's see what happens here with a little bit of a normal summer break, and then hopefully we stay nice and current. And I would think that we'll have a very soft landing.
So is there pushback coming from the consumers, or is that just idle chatter at this point?
I think that's a fantastic question, Susan. That's what they want to tell us. That's the speculation. I don't see any proof of that. Last week's comprehensive beef movement, 11% was for export. That's a nice solid number. If things were so bad, how come a major packer added a Saturday kill? If things are so bad, how come we killed 126,000 today? So to me, I don't know. I'm not a big believer that all of a sudden they're going to flip a switch with the demand thing. But hey, it's a high price, I suppose. Let's be sensitive to maybe the middle meats coming back just down a little bit more. But I don't really believe at this point that we can say anybody equivocally that that's the problem.
Well, on Wednesday, the Feds wrapped up their 2-day meeting. And do you see that having any effect on this cattle market when they say, we're going to raise the interest rates, but not right now?
For sure. It absolutely does, because this is above my pay grade, but okay, I'm trying to understand this as best I can. If the Fed says, okay, we better quit with this interest rate deal, that's telling you that they're afraid the thing has slowed down now, that they're afraid of we hit the brakes too hard to slow down the economy, which is also traditionally is what happens. They wait too long to start it, wait too long to stop it. And so that for some of the, the economic people that I like that can dumb it down well enough for me to understand that's your first signs, that means that maybe this economy is slowing. And that's the first foretelling of, are we going to get a recession, which I think most people are afraid of. It's just how big, how deep, how serious. Cattle prices can survive mild recessions. I can statistically prove that. But if you have a great big train wreck deal, which I don't really think is what's going on, that certainly has an impact. So I just hope that, ironically, when we get to the first quarter of next year, when I believe the tightest supply of cattle is coming, at least in my career, okay, I just hope that isn't the same timing as we try to talk this whole recession business. But I don't know. We'll figure out. We'll worry about tomorrow, right? I guess we're not worry about February cattle yet today. So.
All right. Sounds good. One final question for you. What's going on the grill for Father's Day for you guys?
Going to be New York strips and for my wife, and big, thick ribeyes for me. So,
all right. Well, happy Father's Day, Brad.
Thank you.
Brad Kooima has been joining us this week. As we always remind you, commodity futures and options do involve a substantial risk of loss, not suitable to all investors. And that's this week's Cattle Call on the Rural Radio Network.